the market reactions make perfect sense to me, and that's what we've been calling for. And the simple reason is Venezuela's oil was going to only one buyer, China. And from the middle of 2024 to December, China has already bought almost 300 million barrels of oil. That's the amount of oil if US puts in the SPR, it will get to fill from its current level, SPR level of 400. So if there were many buyers and they don't get the Venezuelan oil and they have to go for alternate oil, then the oil prices react. Only one buyer who has already bought a lot, this was expected, this was priced in.
What do you think the U.S. meant by running Venezuela? I mean, in terms of oil supplies, I mean, essentially, are they going to decide who pumps the oil, for example? I mean, in terms of, really getting production back, I mean, how difficult would it actually look?
You asked a very good question, and I think the answer is probably less in the politics of it, but more in the chemistry of oil. And my answer is that, one, there is a lot of hype around, I saw the previous person, greatest oil reserves at 300 billion barrels. That is wrong. Those are paper barrels. In somewhere 2008 or so, when the oil prices touched 150 near dollars per barrel, the Venezuelan then president just increased the numbers because a lot of the heavy oil, this oil is twice as heavy as the normal Middle Eastern barrels. So at that very high price, they proved that we have a lot more oil. At the current prices, these are paper reserves, and probably the reserves are probably less than or near 100 million barrels. So that's one point. And the second point is that this oil is so heavy to produce, and the number of refineries in the US and elsewhere is declining who wants this kind of an oil. We already know Saudi Arabia in the recent times canceled a 1 million barrels per day heavy crude oil project, Safania. So this is not the oil what the world needs in future as we go where we need less gasoline, less diesel. So I guess a lot of hot talk, a lot of, I guess, wrong analysis happening, and that's I wanted to just call out.
Okay, well, that's why we got you on, to help us understand the nuance. It's almost like me saying I should have been the Olympic gold medal sprinter if only I trained every day of my life since I was born. But help me understand this then. So in the meantime, though, so the Venezuelans have stepped back as far as supply is concerned, and really the group that's filled that gap are some of the heavy oil producers out of Canada. Do I look at that group as potentially, if all goes to plan, as perhaps the potential losers here, the Canadians?
Good question again, David. I think you gave a very good analogy. I think that you did a better job than me. Now, in terms of Canada, there are no tariffs, and since these hot discussions have taken place between Canada and US, Canada has only lost about 500,000 barrels of oil, and that barrel of oil has gone to China. There is probably a limit to what China will buy more, because China has already bought a huge amount of Iranian heavy barrels. China has already bought huge amount of Venezuelan barrels. So China is kind of the vacuum cleaner of the oil markets for quite some time, and an oil bank for these sanctioned countries. So there won't be a very significant appetite for Canada. So I would say in short term, Canada is probably not a winner, but what Canada is probably doing is the right thing, creating some optionality so that they just don't depend on the US. But overall, I believe the heavy oil producers are not going to be winners. The winners will be in the Middle Eastern medium sour barrels.
I see. You mentioned about China. I mean, so do you see any sort of impact, this takeover by the US, on big oil buyers like China then?
No impact is my answer. And my answer is simple. Everybody in China prepared very well for this scenario. From the middle of 2024, as I mentioned, China was buying around 100 KBD, 1,000 barrels per day. China jacked it up. Now the January arrivals are at 900, and there is huge amount of floating oil, Venezuelan oil, also around China. So I would say China is well stocked up on these kind of heavy barrels. Yeah. So no impact on China is my answer.
Final question for you then. How does this, since it seems the conversations keep going back to the Middle East, might this affect how the other big oil producers decide how they turn on or turn off supply?
So I think the amount of barrels we are talking about, which Venezuela was exporting to China, is about 900. In my view, the entire this situation is only a U.S.-China conflict. Is nothing to do with possibly the reserves in Venezuela. And then you rightly point out, then the OPEC. So if we lose some of these barrels in the market, then OPEC does have some opportunity. And OPEC has opportunity simply because of the right quality of the barrels they hold. Even the U.S. shale, which is a lighter barrel and getting lighter, is also not the right quality. So I would say more than the volumes for the OPEC player, the quality is on their side, and that's where they will continue to calibrate. And one more point, very important point, which often gets missed, is that Middle Eastern OPEC players are not just crude producers. They are build big refineries. They are big product producers. They pump a lot of oil products to the market. So when they cut crude oil, they pump products. When they want to bring the crude, they cut the products. Perfect system of calibration. And that is one big reason why we don't see oil prices go very volatile in these geopolitical times, because OPEC runs with two pedals of crude and product, and it does a good job at it.
Mukesh, real quickly, you wrote a report recently about China's oil market influence, and you call it market chess. That 2025, China changed oil markets in a very significant way. Can you explain a little bit more about it, and what does that mean for 2026 for China?
So let me give you a 2026 view first, and then I'll go and explain the 25. The 2026 picture is that China has probably planned a lot better in terms of stocking the barrels. China is also doing a significant shift in their refinery portfolio. China used to make almost 38% diesel yield, but China has reduced that diesel yield to about 27%. China is converting a lot of the diesel into naphtha. And why so? Because China used to buy a lot of the petrochemical feedstocks from the US, and with the tariffs, that got affected. So China is updating, re-optimizing its entire refining portfolio in, I would say, a way which people are not fully accounting for, and that is giving China the strength, and that's what China did in the recent the years. So 2026 means China is changing the technology, China is optimizing the refinery footprint portfolio, and China, I would say, is also focusing a lot more on the joint ventures with the Middle Eastern players, so they have the security of supply. So I would say China, in my view, is very strong, very well prepared, ahead of everybody probably in the world in terms of managing the oil markets, and they are the reasons why the oil price is neither tanks, neither probably goes very high. So China is some ways giving some stability to the oil markets. And that will continue.
Great to have you. Thanks for the time.